Investing can be a great way to grow your wealth over time, but it's important to approach it in a careful and thoughtful manner. Here are some steps to consider when thinking about how to invest. Number 1. Set your investment goals. Before you start investing, it's important to have a clear idea of what you want to achieve. Do you want to save for retirement, buy a house, or generate passive income? Number 2. Determine your risk tolerance. Your risk tolerance is the degree of risk you're willing to take on in pursuit of your investment goals. Factors that can affect your risk tolerance include your age, financial situation, and personal preferences. Number 3. Choose your investment vehicle. There are many different types of investment vehicles, including stocks, bonds, mutual funds, real estate, and more. Consider your investment goals and risk tolerance when choosing the right vehicle for you. Number 4. Develop a diversified portfolio. Diversification can help reduce risk by spreading your investments across multiple asset classes and types of investments. Number 5. Start small and learn as you go. It's usually a good idea to start with a small investment and gradually build your portfolio over time. As you gain experience, you can refine your investment strategy and make more informed decisions. Number 6. Monitor your investments regularly. Keeping an eye on your investments and adjusting your strategy as needed can help you stay on track to meet your goals. Number 7. Consider seeking professional advice. If you're unsure about how to invest or need help developing an investment strategy, consider consulting with a financial advisor or professional. Remember that investing comes with risks, and there is no guaranteed return on your investment. Be sure to do your research, understand your options, and proceed with caution.